Well, before we get started, there's something I've got to tell you guys.
I am back. What it do, baby?
The dividend portfolio's back, baby. Not only is it back, but it's back stronger than ever. If you want to build a dividend portfolio that gives you massive gains and consistent growing dividends year over year, then stick around because you're not going to want to miss this. I'm going to show you guys the first 3 purchases that I've made to lift this thing from the ground up and the entire blueprint for how I'm going to turn this portfolio into a money printing machine. So without further ado, let's get into the video. What's up, my peeps? Johan Lorenzo here. Welcome back to the channel. And in today's video, I want to share with you guys the start of my brand new dividend portfolio. There are many different ways you can structure a dividend portfolio. I'm not saying this is the best way to do it, but it's definitely one of the better ways to do it. Unfortunately, way too often, dividend investors get caught up chasing a dividend yield that looks decent on paper, but comes at the cost of a stock that is completely stagnant over the course of a year, or even worse, you lose money on the share price. And now you're down on the stock and the dividend you collected is basically a wash. I think the way I'm going to do this here now is one of the better ways to maximize gains and increase monthly cash flow. I'm going to name this portfolio the Financial Freedom Portfolio for the simple fact that that is exactly what we're all chasing here, financial freedom. And the main goal of this portfolio is to consistently generate safe and reliable income each and every single month through 2 different sources. Number 1 being dividends, and number 2, you probably guessed it, selling covered calls. Selling a covered call option on a stock with a smaller dividend yield will help supplement that small dividend payment and ultimately increase the monthly cash flow in this portfolio. I will use this strategy to compound the portfolio as quickly as possible so we can reach $1,000 of passive income every single month. And most importantly, this is obviously going to be a public account so we can have full transparency here on the channel. Every single purchase and every single trade I make in this portfolio will be documented and exposed right here on this channel. I'm also going to share with you guys a list of dividend companies I have on my watch list that will eventually, most likely, make their way into this portfolio. So now that we're starting this thing off from scratch, I've gone ahead and purchased my first few shares. I'm sticking to the basics here, just like a newbie would. The first 5 shares I purchased for this portfolio are from one of my favorite ETFs, and that is ticker symbol SCHD, the Schwab US Dividend Equity ETF. The ETF tracks the Dow Jones US Dividend 100 Index, sporting a dividend yield of 2.87%. SCHD is a good mix of dividends and growth. With over $32 billion in assets under management, over the last year, they've returned their shareholders 17.1%. Over the last 5 years, they've had a gain of 79%. And in the last 10 years, they've had a gain of 191%. When you buy shares of SCHD, you're investing your money across 105 different companies. Not only does it give you some diversification across multiple sectors, it's also given investors great returns and great dividend pay raises throughout the years. In the last 10 years, they've grown their dividend at an average of 34% per year. This is a great ETF for anyone, especially if you're new to investing and want to get some money in the game. The second purchase I made here is one of my favorite tech companies, and that is ticker symbol AAPL. Apple. Oh, Apple. Chances are you're probably watching this video on an iPhone or a Mac laptop or PC. Heck, you might even be wearing an Apple Watch right now and listening to this through your Apple headphones. What I'm trying to say is this. The company has so many different ways to suck the money out of your pockets. Anywhere you go, you see people using Apple products. If there's a company that I'm confident will be around for the rest of my life, it's probably Apple. With a market cap of $2.8 trillion, you can sleep great at night knowing that this company ain't gonna go bankrupt anytime soon. They have a low dividend yield, but the company makes up for it on its share appreciation. Not only that, but if you sell covered calls on Apple, you can easily make $80 a week. Easily. That's not even a doubt in my mind. $80 a week times 4 weeks equals $320 a month. If you multiply that by 3 months, which is how most companies pay their quarterly dividends, that equates to a $960 dividend payment. The only negative I see here is you don't get the same tax benefits from collecting options premiums as you do from collecting dividends. But at the end of the day, you're still getting a great return and you're still creating a bunch of cash flow that will help you buy more shares of whatever companies you want. The third and final purchase I made to start this portfolio off on the right track, they're a software giant. That's ticker symbol MSFT. Microsoft, another member of the $1 Trillion Boys Club, $2.2 trillion market cap. This company ain't going bankrupt either anytime soon. As a matter of fact, they're growing a ton more with their new current purchase of Activision Blizzard Inc. The company's Game Pass subscriptions has shot through the roof, and it should continue to do so over the next few years. Microsoft has increased their subscriber base by 25 million users. That's a 39% increase within the last year. They also have a market share of 60% in that industry, making them the clear leader in the gaming market. With a dividend yield of 0.82%, I'm definitely going to be selling covered calls on Microsoft once I work my way up to 100 shares. I will be dollar cost averaging this account, guys. I'm not going to go all in right now. The market is crazy. As you guys can see, there's a lot of bloodshed every week. I'm going to dollar cost average and work my way to 100 shares. This is easily another scenario just like Apple. $80 a week, $320 a month, collecting premium, and I'll just let the stock do what it does. I'll let the stock do its thing and continue to grow its dividend. Microsoft has been growing its dividend at a 13% rate every year for the last 10 years. All right, now I want to give you guys the full blueprint to creating this money printing machine for yourselves. All right, guys, so as far as the money printing machine goes, these are going to be the companies that I'm most likely going to add to the portfolio. As the time goes on, I will do a little more research on them, but as of right now, these are the ones I have my target on. So I have this split up into the quarters that we get paid in, right? Because these companies that I have written down here, except for the REITs and the BDC, they pay you on a quarterly basis, so every 3 months. So the group of companies that I have right now that I'm planning on putting into this portfolio for the months of January, April, July, and October, it's going to be Automatic Data Processing, JP Morgan Chase, and the SPDR S&P 500 ETF. For February, May, August, and November, I'm going to have Apple, which you guys already know, American Express, and AbbVie. For March, June, September, and December, this is going to be a good bunch here. Coincidentally, this is just how it happened. I did not plan this, but there's a good bunch of stocks here that are going to pay in these 4 months. And that's going to be T. Rowe Price. Yup. I think they're at a great value right now. They fell way too much. I think this will bounce back, but I am not going to be adding to T. Rowe Price yet. I will not be building this position anytime soon. I am a big believer in building up a position before moving on to other ones, right? I don't want to own 20 different companies and have 8 or 9 shares of each one. My goal is to have 30, 40, 50 shares of each company and then start adding other companies. That way, when I do get paid a dividend, it packs a bigger punch and I can do more with that dividend. So I'm going to build up Microsoft, Apple, and SCHD for a couple weeks, and then we'll see where we go from there. But for March, June, September, and December, the plan is to have T. Rowe Price, McDonald's, Home Depot, Waste Management, Microsoft, as you already know, Nextera Energy, and the Charles Schwab Dividend Equity ETF, which is the one I already have now, SCHD. And then I want to add to these 2 monthly pairs, which is my favorite monthly pair of all. It's a REIT, Realty Income, and then Main Street Capital, which is a BDC. I sometimes confuse them and call them a REIT. Even though Main Street Capital is not a REIT, I call them that because they basically get taxed the same as a REIT. But Main Street Capital is a business development company and they also pay monthly. So I am planning on adding those two. And obviously those two will cover all 12 months and they will tag along with whatever other companies land in those months. As always, thank you guys for watching. And if you have a dividend stock in mind that you think I should add to this portfolio, then drop me a comment down below and share your thoughts with me. I really do enjoy reading the comments and staying up to date with my viewers. So once again, thank you guys. I'll catch you on the next one. Peace.